What's up guys? In today's video, we're going to be talking about a few of my trade ideas from last week. We're going to go over what went into these ideas, how I read the trend, and most importantly, how they fit the ASFX edge. Welcome back everybody. For those of you that are new, my name is Austin Silver. I appreciate you being here. Today, we're going to be talking about a few of these really solid risk-reward setups that I was able to generate last week. I want to share these ideas with you so we can really hone in on how they fit the ASFX edge. I want to talk to you for a second before we get into the chart about the ASFX edge because I had a few questions in my Instagram inbox last week just asking me what is a trading edge. Everybody defines it slightly differently. When I talked to Tom Basso, he said it a certain way. I don't want to quote it word for word because I don't remember exactly word for word, but I know Mike Bellafiore says it a little bit differently. Steenbarger says it a little bit differently. So how do we get a solid answer here? Well, for me, I think it has to fit three things. It's got to be repeatable, it's got to be tested, and it's got to fit you. And to me, the trading edge can't be an edge unless it's a system, which means that it has predefined entry, exit, and risk management rules built into it. So when you see the signal, you know what your risk should be, you know how to size into that appropriately, and like I said, it has to be something you can repeat on a daily basis, it has to be something that is tested and proven profitable, and it's got to fit you, who you are as a trader. Is it short-term or long-term? Are you a scalper or are you a swing trader? What pairs is it? How much volatility do you like to trade? Do you like crazy GBP pairs right now that have 200 pip ADRs, or do you like AUD pairs that move a little bit slower? So you really have to find an edge that's tested and proven profitable, it fits you, and it's something that you can show up to the market and repeat on a daily basis. And the testing is, I think, the most important piece. I think you always have to back test and prove the strategy that you're using before you put real money into it. So if you can't test repeatable entry, repeatable stop, repeatable risk, then it isn't a system and it isn't an edge. But if you can, then you're moving in the direction of actually having something that you can show up and put a business plan behind and say, hey, this is what's going to take me to profitability, not today, not this week, but over the long run. And that's really what I think a trading edge is. So now that we are on the same page about what an edge is, let's take it to the charts, and I want to show you how a few of these ideas, Gbp Chf, Euro AUD, how they fit into, like I said, what we call the ASFX edge. Now, the first pair that we're going to look at is Gbp Chf. What you can see here is Wednesday, Thursday, and Friday separated by these vertical black dotted lines. Now, if you've never seen my charts before, what you're looking at isn't intimidating. Don't get scared, I promise. It's very simple. On top, with the black candlesticks, you're seeing just exponential moving averages, EMAs. And on the bottom, you're seeing a TDI. It's an RSI with two moving averages. And what these indicators help me do is read the trend. So from Wednesday into Thursday, we saw price action pick up from 1.168 all the way up to 1.178. So you saw a really drastic move on Wednesday, top to bottom over 125 pips, right? That's about a 1% move for this pair, which in currency pair terms, 1% is a lot, especially in a day. So then coming in on Thursday and into Friday, we found a clear long bias in this pair. We saw it making structure moves, and in particular on Friday, we saw a risk-reward setup present itself off a very key price level that I want to show you how easy it was to identify it. So if you see Wednesday's high here at that 1.178 level set, and let's just draw a vertical line going across, horizontal line going across at that high. Now, I don't use the pin, I always use bodies to mark that. That price at 1.1788 was broken and became support from the London into New York session on Thursday. So once we then had that price as support, coming in on Friday here, if we were to reach that level and have a long biased TDI and long biased EMAs and long biased price action, which I just showed you we do, when we reach that price level, it's a logical place to be looking for long opportunities because the bias is very clear. Now we're just lining up the timing within the edge. Now, people are going to say, well, Austin, do you just buy it when it comes to the white line here? No, that's the 200 EMA. And you never just buy it just because it comes to a line or becomes a support level. It's never that simple. I don't understand how some people think they can trade just off support and resistance and make money. I don't know anyone that does that consistently and that it works for them. So what we do is we'll come down, and at this point, if you take our courses, if you go to the website in the description here, you can check out what the D1 entry is. But at this point, we're looking for D1 entries following that long bias off the significant level of the 200 EMA, and that resistance then turns support from Wednesday into Thursday and now into Friday, that black dotted line that you see. One other thing I will also throw on here is the pivot points. Right there, you can see with that white line, that's also our daily pivot point. Now, pivot points are a very basic indicator calculated using the previous day's price action. So That's based on math. That line is not some fancy indicator. It's just based on simple math that comes from the price action the previous day. So it's a very strong level in my opinion. I love math. I love the numbers. I don't like opinions. So when we reach that price level, if we have a long bias, we can actually take it to the shorter time frames and look for risk reward just off basic market structure. So at this time, we're looking at about 6 to 7 o'clock New York time. We find what we would look for, like I said, with a D1 signal here with bullish divergence, which means our RSI, the green line on the bottom, is rising and price action is falling. Now, I just labeled that with that black line. Once we have that set, we could start to create risk reward setups looking for this to come higher. Let's say we were to look for a breakout here at the 1.1794 level. A stop loss would probably make sense, in my opinion, to go at the bottom of that structure, of that divergence, and we would look to see what type of risk reward we can get just to that 1 minute 800 EMA. The reason why I would use the 1 minute 800 EMA, if we go back to the 15 minute, is because that's the 15 minute 50 EMA. See how we're trading from the 200, which is the white line, up to the blue line here, which is that 50. When we're moving lower here on the higher time frames, and we are, right, from the high to we're now setting a low of day, when we're moving lower, we want to make sure we understand that it could hit that 50 and absolutely come back down. So when we're looking for long ideas, we know that that 1 minute 800 EMA, 15 minute 50 could be an issue. But just to that level, the risk reward was 1.5, which is pretty good. This move from our first idea actually extends almost 3R. Now get this is where it gets interesting. If you're reading this left to right, which you've heard me talk about before, that bullish divergence off the bottom actually becomes bearish divergence here at the top, okay? That bearish divergence would tell you there's potential change coming. So what do? You wait. You don't jump in for longs right there because you know that that bearish divergence means now that's in control and we could see this come lower. So it's not a good time to be looking for longs. But if you wait, it comes back to that daily pivot, which is this white line, that same black dotted line that shows Wednesday's high, right? The breakout price. And look what you get here. More bullish divergence, right? From that RSI point to there. We can blow that up just to confirm. See how that RSI here, it's rising into there. Price is actually falling if I go like this, right? Now again, we have a bottom where we might be looking to put a stop loss if we could see structure move higher. Here's the kicker. Look at this one. It's even cleaner. You have a level then set here. So first your stop would look to go there. Then the level is set here, then here, then here, then here. Look at the higher lows. So you could wait for this to really start to pull the TDI into the buy zone, and you could be looking to go long somewhere in here, maybe with a stop like 8 or 9 pips away like that, because you know you wouldn't want it to return and retrace that structure. You just want it to continue making higher lows, and that does. I mean, here's another opportunity on this pair following that long bias, 4R on this one into the close going on into a Friday into the weekend, I should say. So those were two ideas there following the D1 entry signal, which we teach in our courses, on Gbp Chf. Now let's transition. I'm going to just show you basically the same entry signal, the same patterns on Euro AUD. So let's look at the 15 minute. Now, we talked about how I use yesterday's bias, how we use yesterday's price action to create trade ideas. So yesterday, which would be Thursday, we had a long idea off the 50 EMA here on Euro AUD. So coming into today on Friday, even though the TDI pulls itself into the sell zone beneath that 50 value, I still like to keep a long bias, especially at the end of the week. Keep the bias from the previous day. Look at the whole week, basically. It's been moving higher. So I'm not going to come in on a Friday and think, oh, this is the day it's got to reverse all the way. I think it's going to probably test some serious support and then continue in the overall trend. So when it pulls back to the 200 EMA, back to the S1 pivot line, there's actually, here on the 15 minute, you can see it, bullish divergence. See how the RSI low here is rising into that price action low here? That's not a good sign. That's telling us that something could change from the drop. It drops, becomes bullish divergent. We need to get to the 1 minute to find risk reward. So we go down to the 1 minute, and what do we see? Super clean structure. In my opinion, it's actually cleaner than the Gbp Chf. So if we just look, that was the line from the 15 minute. If we're more precise and we draw it here on the 1 minute, you can see price is technically falling left to right, and the RSI shows us that it is definitely rising, right? You can see that. Just move this like that. And that there, right? So you can see that rising, and then look what happens. If we just draw structure with the pen again, the low is set here, higher, higher, higher. So you can have clear stop losses as that TDI pulls itself into the buy zone. And if that reverses and comes down into the sell zone quickly, the trade is beat. But if it continues to make higher lows, then you've caught it off a really strong support level at that 200 EMA in the direction that it's been moving all week. It's a great buy position. Now, again, like we talked about on Gbp Chf, the 50 EMA is in your way, but what does this do to the 50? It bodies it with one strong bar right there, and then continues to the daily pivot and actually to test high of day set in the Asian session. 70 pips with a 10 pip stop, 7-1. It's a fantastic move following the same signal, what we call a D1. So our A1 signals are breakouts, right? Maybe for a new high of day, new low of day, something like that, off a solid EMA with proper confirmation. The D1s also need proper TDI confirmation. That's kind of what I'm saving for the course. That's what I'm not going into today. But the D1s are less of a breakout entry, more of a pullback entry. So if you're looking at the overall trend, clearly it's been moving up all week. Even though today the technical side of it on the TDI wasn't great for longs, you can still keep that bias with some experience. You got to get experienced with a system, but with our system, I think this is a great trade opportunity, absolutely. And I want to also just touch on Gbp Aud, because this is something we were watching all week for D1s. I mean, go back just to Wednesday here, you can see we were long, I actually got stopped out, and then it moved about 160 pips on Wednesday, another 170 on Thursday, and then Friday it just kind of chilled, but still came a little bit higher to test that Thursday high. So a lot of bullish movement on this pair after starting the week sideways. This is where we started to generate the long ideas because of the TDI. And once it broke out in the Asian session from Wednesday going into Tuesday night into Wednesday, then it was over. It picked up momentum and it never came back. But just take a look with me here. Let's turn these pivots off just to clean it up. If we just take a look, when this pulls back to the 50 EMA, you see the TDI rising, you see those EMA starting to come up, you can go to the 1 minute and use the D1 signal. Now, I would recommend you don't just go do this. You should watch our course and learn how we identify the proper entry signal. It's what we teach in the course, the D1. But you can see it again here. Same pattern, ready? Bullish divergence here because we're following the long bias. Bullish right there, RSI rising, price is falling. And what happens? I'm going to just show you higher lows. Here, same level as here, right? Here becomes a level, here. So you can read risk reward as it pulls the TDI up, price pulls up. You can use the most recent structure point as your stop, and you can easily come in and make money on these opportunities. Easily. This is following the D1 signal. And then that GA trade, man, if you could have had that entry and not gotten stopped like I did, this carried for 2 days. Look at that. I mean, from that entry point, let's just mark it just to see. You're talking 350 pips, 20 R. Now, of course, the way that we trade, the way that I teach you guys to trade in the course, we piece ourselves out. So if we risk 10 and we go up 10, you might take a little profit depending on the grade of the setup. Or if we risk 10, we go up 20, you might take a little bit of profit. So you wouldn't be holding the full piece all the way up into the next day, but you could be holding a small piece of it. That's the way that I do it. You always want to be taking profit. That's the kicker. So I hope that now after today's video, you can see how these three ideas work together. They're all the same signal across 3 different pairs on 3 different days, basically, but it's the same pattern within the ASFX edge. So please, if you have a question, drop a comment below. I'm more than happy to explain anything about the ASFX edge other than what we teach in the course. If you want to find out more information about that, just check the link in the description. It's www.asfx.biz. Tons of information, tons of testimonials. Don't take my word for it. Just check that stuff out. So I appreciate the time. I hope today's video brought you some value. Good luck trading next week, and I hope to see you in the next video.